Over the last 2 years, the world of luxury has faced a reckoning. Once the ultimate status symbols, the prices of G-Wagons, Rolex Submariners, designer handbags, and even rare Pokemon cards have taken a nosedive. Think you made a bad financial decision? Let me introduce you to people who bought electric Hummers with 8-year loans to rent out on Turo, now buried under $150,000 of negative equity. Suddenly, your choices don't seem so bad, huh? But here's the twist, these markets might be clawing their way back. Bitcoin's shattering records, the stock market's rallying like it's 2021 all over again, and Dogecoin is somehow worth more than some of the world's most iconic companies. The frenzy is back, baby, or is it? In this market, prices only seem to go one way, up, and that brings back an old trick labeling just about anything as an investment. Person, how else can I explain spending $11,000 on a first edition Pokemon card? Responsible investing, of course. Now, alternative investments aren't all bad. In fact, for the wealthiest among us, they're a brilliant hedge. These assets, from real estate to artwork, often move independently of the stock market. That means when Wall Street crashes, your painting of a banana duct taped to a wall might still hold its value. Plus, with some alternative assets, you can add value directly. Rebrand a commercial property or spruce up an antique, and voila, its worth could skyrocket. But the key attraction? The competition isn't nearly as fierce. While Wall Street is dominated by math geniuses with PhDs from MIT, alternative markets are like the Wild West. No SEC regulations, no insider trading alarms. It's all about who knows what. Of course, the flip side to this freedom is chaos. Alternative investments are illiquid, meaning it can take years to find a buyer. They're also ridiculously expensive to trade. Sotheby's, for instance, takes a whopping 20% commission on sales under $10 million. Yes, you heard that right, 20%. So before you dive into this world, remember, these markets are not for the faint of heart or wallet. But let's talk about the real MVPs of the alternative market luxury goods. Rolex, Patek Philippe, Hermes, they've all mastered the art of scarcity. Limited production, endless wait lists, and prices that rival small houses. For years, this strategy worked like magic. Buy today, flip tomorrow for double the price. It was a risk-free dream, until it wasn't. Now, the market's flooded. Everyone wanted in, but not everyone wanted out fast enough, and if you think this bubble is isolated, think again. The hype around these markets is as linked to crypto and meme stocks as anything else. Here's the harsh truth. For many, alternative investments were never about building wealth. They were a lottery ticket, a chance to break free from debt or financial struggles. But instead of life-changing profits, most walked away with even bigger problems. Today's financial environment isn't about greed. It's about desperation. People aren't chasing Lamborghinis anymore. They're just trying to pay off their underwater car loans. And the stakes? Higher than ever. But it's not just personal choices driving these trends. Globally, things are shifting. China, once the largest luxury goods market, is reeling from a real estate crisis and government crackdowns on excessive wealth displays. Brands that banked on ever-increasing demand are now sitting on unsold stock, struggling to adapt. And while some markets are up and to the right, others are flatlining. It's a tale of two economies, and navigating it requires more than hype. So where does that leave us? If you're here for financial wisdom, here it is. Invest responsibly. If you're here to splurge, treat yourself. But don't kid yourself into thinking it's both. The truth is, there's no shortcut to wealth. And as for the future of alternative investments, the story's far from over. But what if I told you the real trend isn't what people are buying, but how they're hiding their wealth? In next week's video, we'll explore why pretending to be broke is the new flex among the ultra-rich. Trust me, you won't want to miss this. Subscribe for more, and don't forget to check out my other video on why most of us aren't really investors at all. See you next time.